Whether you're thinking of trading with a change of character or you already trade with the change of character, watch this presentation of videos that is going to take your trading to the next level. Let's dive into it. So we're on the pound US dollar pair. I'm going to go to the weekly time frame first. I'm going to show you a recent area where you can see the market showing me these reversals in the market. To start with, we have this area here on the chart where we can see a break of structure to the upside. This blue candle represents an imbalance zone has been left over. Inside these zones, you're going to find leftover areas basically of orders what have been remaining in the market which need to be filled. So let's mark this out as an imbalance zone. We can identify the market comes back, fills that imbalance zone on the weekly time frame, and we have a nice bullish move away. Understanding this process is also key to understanding where to find your trades. We also have an area of demand here as well, but for this purpose, this is an area of imbalance which created this reversal in the market we could have caught a trade. Now what we do here is we go down to a 4-hour time frame. If we're on a weekly time frame, I like to look at a 4-hour time frame. I'm going to look now for that reversal out by using a term called the change of character. Now, for me, it's actually classed as a confirmation reversal entry, which it has been for many years. Recently, across the YouTube platform, I've seen the change of character rising. It's just a newly named term for a reversal in the market. It's nothing more, nothing less than that. So please do not take change of character as something new, something special. It is simply a reversal in the market. I'm going to demonstrate that to you right now. So here we have the market dropping down into this area of imbalance. We fill the imbalance here to the pip. Now, to look for the change of character, you may have seen on some previous videos, I demonstrate this using the wicks of the candles where we see a break of structure. Now, what I'm going to do, I'm going to show you a simplified method to make this much faster for you to be able to start finding these reversals. All you need to do is go to the line chart. On that line chart, this is going to show you the fastest way to identify a reversal in the market. And right here, we can see the market creating this low, lower high, a lower high. But we do not make a lower low. This is the last lower low we make from this swing high. So once you see that, we can mark off here a level. That is my break of structure where I'm looking for a change in trend. That is my confirmation trend reversal. All from what you've learned it to be is that change of character. So when we see the bullish movement here to the upside, place price back on the chart and you'll see a big strong blue candle. What does that represent? Again, an imbalance zone has been left over. Here we can then draw out a level of imbalance. Just like we saw on the weekly time frame, we saw the 4-hour come into an area of imbalance. We're seeing the same thing here on the 4-hour with a lower time frame, which would be for me a 30-minute time frame coming back into the imbalance. Where we saw the weekly time frame showing you a full reversal after filling that imbalance, this time we see a 50% area fill before we see the move to the upside. So when we see the market pulling back into this 50% area, just mark this level off here. Then I'll go down to a 30-minute. We can do the same thing on a lower time frame. I want to show you that this works from a weekly down to currently now a 30-minute. You can see that the market comes into the 50% area. Right, looking at price, we go to the line chart. On that line chart, once again, we're going to look for that reversal out, that confirmation of the reversal. We can see the market makes the last low here. That's our last lower low in the market, which means this is our last lower high. That is the breakout point we're looking for. There, you can see the breakout happens. That is what they class as the change in character. We've come in, we've created a change in character, trend reversal, same thing. We can see the bullish move up. What does that candle represent once again? Yes, the imbalance zone. So we leave behind here an imbalance zone once again. Look, this has happened over and over. And again, look what happens. We got a full fill of the imbalance. Now, as an imbalance zone, we also have here an area of demand. Have a nice area of demand I can mark on the charts where we can look for an entry out of the demand zone. Now, I believe if we go forward, you can see we come back into the demand zone once again. We actually retest that demand zone. We never close through that imbalance. That's important to understand. So the market actually tests it once. And if I just mark off the low of this level, look what happens. The market has to go lower, take that low again manipulates through that low, just takes the low by a pip, and then picks up more orders, and we see a big push away. And that's how they stop you out before they move the market. And that's a big push up in the market. Now, again, we can do the same thing. When we do see this market go lower and makes that reversal, we can now go to a 5 minute. Just find that on the chart quickly for you. There's the 5 minute chart. Let's go to a line chart. Zoom in. Remember, the process of using the line chart is much faster for you. You haven't got to think about anything. You can just look at the chart, find that reversal. Again, we do have a lower low there, but this looks like more of a swing point in the market I like to use. So we can see a nice breakout. Okay, there's a break and retest. If we now go to price, what do you see, guys? Look, we see a lovely area again of imbalance. And where do we come to? The 50%. Let's just remove this arrow. We come to the 50% of that imbalance once again, and then we see a reversal and the market goes up. And we could do the same here. We could go down to 1 minute time frame or even lower, 30-second time frame, and look for the same thing. This will happen over and over again. The change of character is nothing more than a trend reversal in the market. As I class it, as I have for many, many years now, a confirmation reversal entry. But the change of character, as you may well know it as, it's exactly the same thing. As long as you understand that this method is going to simplify it for you to be able to find those turning points with quickness and ease in the market, for you then to find your entries, this is going to help your trading. So how do we know when to look for an entry off an area of imbalance or an area of demand? Because if we had an area of demand drawn here, look, this is our area of demand I would draw. Here in the market, we never come back to it. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. At that point, I've missed the move. Now, quite frankly, there is no way of knowing for sure if the market's going to just fill an imbalance and then make the move or go to demand zone. If you want to have the odds in your favor, then you look to take an entry on the demand zone every time. Yes, sometimes you're going to miss it. Other times you will get triggered into that trade. If you were taking an entry here on a 30-minute entry, you would have caught a trade using a set and forget strategy. Now, on a 5-minute entry, you've missed that trade, and that's a big trade. I mean, the market goes for a long time up here, all the way up. So how can we look to capture that trade? How can we look to identify the market showing me an entry here? How can we confirm this? Let's go back into this price here. An easy way to confirm this is we look for a reversal out. Now, a simple reversal here shows me that we can take an entry off this candle. So forget about the demand zone, the imbalance zone. Wait for the confirmation of that change of character, that trend reversal. Look for the reversal pattern to give you an entry. Take an entry off that candlestick. You're done. Now, if we go back to the 30-minute, that previous retest over here, market breaks up, comes back, retests. I can do the same thing again. I can confirm the reversal candle. There's my entry, and the market goes. Now, eventually it does get stopped out here on that move. But look, we do go all the way up here first before that, and you're probably out of the trade with profits. And if we go to a 4-hour time frame as well, show you this is multiple time frame. It works on every single time frame. Now, again, we come in, we feel that imbalance. We see the break of this swing high, this move here, break up, pull back. This would be my level to reverse. there's my entry on that bullish candle. And there you go. That's using a weekly with 4-hour entry. I've then gone through and shown you a 4-hour time frame with a 30-minute entry. And I've even shown you a 30-minute time frame with that 5-minute entry. And it works the same on every single time frame. So if somebody says to you, do you scalp the market? Are you a long-term trader? Are you a swing trader? I've just shown you here that you can apply the same concepts over and over again. And they work on every single time frame. Just remember, when you're using 2 time frames, it's going to help with not only finding a better trade setup, it's going to help with your discipline and your motions in trading. So a simple way of reading a change of character. This is how I do it. Now, if you're not sure what the change of character is, there is a video in this channel. I will leave that at the end of this video, goes through the change of character in more depth and how you can apply it for an entry. But I will quickly go through now exactly what a change of character is. A change of character is basically if we're seeing this downtrending movement in the market and we eventually see the market rocket to the upside and it breaks through this high, then you're looking for the market to come back to an area of demand here, an area of imbalance, a previous structure in the market, whichever you're looking for that pullback. And this is your change of character. You see the market continue in the opposite direction. That is all the change of character is. And we're going to go through now how you can read that on the price chart. Okay, that you're on. Says we're looking at a 4-hour time frame right now. How do we find the change of character on a 30-minute without going down to the 30-minute time frame? I'll go through how I actually look at taking a trade here on this 4-hour time frame. The potential target is this high. Okay, so what I'm looking for is the pullback here. And when I'm looking for my trades, I'm either looking for price to pull back to the area of supply and demand, above or below a swing high in the market, or into an area of imbalance. Now, you can learn much of this inside that channel. So if I was looking for a trade here, this is how I go about it. And this is in fact the trade I actually took. So we see this move to the upside. That is what I call my trading range. Now, there is a video also in this channel that goes through the trading range. This is where I'm looking for price to pull back for an entry. Now, the first thing I'm going to do here is look for where the 50% area sits by using the Fibonacci tool. I want to see price at least pull back to the 50% or below that 50%. And that's what we call a discount and a premium area for a trade. There's also a video in this channel which goes through the discount and the premium zone, how you can use this tool to maximize your profits. I will leave that video linked above now so you can watch that later if you wish. So first we're looking for price to pull back below this 50%. Now obviously in hindsight we can see it does it here, but we'd mark this off. We'll also be looking for areas of imbalance. So here's an area of imbalance in the market. There's another one here as well, but we can see the market already spiked through that area, so we wouldn't have that on the chart. And there's another area of imbalance sitting here. And as I said, we'd also be looking for previous highs and lows. So there's a low here in the market. There's also this low what was formed here. And then you have the main low. But if price goes through this low, then we have a change in trend. So we can see price comes back into this area of imbalance. We fill it, we go below this low. So how do I look for that change of character without going down to lower time frame? How can we simply just see this on this chart? So this is the area we'll be looking for an entry at this point. If I just remove everything now quickly again. If you want to see exactly how I marked all those out, went through it just then, just replay this video and you can watch that again. But when we see price coming down here, when we're looking for that change of character, what I want to see is 3 candles. Let me just get my drawing tool again. So we're looking for a candle, wick to downside, another candle, and another candle. So we're looking for a 3 candle rule here, looking for a higher candle to the left, a higher candle to the right. So this creates what we call a pivot in the market. Now the same would be, we're looking for the area for a bearish move. We want to see a lower candle to the left and a lower candle to the right. So we then have a pivot high. So again, lower to the left, lower to the right. That's what we're looking for. This is all we're looking for that change of character. And this will all make total sense in a moment. So when we see price going into this area of imbalance, removing and going through this previous low in the market, what do we look for? We're looking for here. Okay, so first off, we see this 3 candles here. right? We zoom into these candles. We have a higher wick to the left and a higher wick to the right. But for a change of character, this first candle high in the market, we need to see removed. That doesn't happen until this bullish candle. So what we then would have to be looking at is the same sequence. If we didn't get another higher low, then a continuation. As you can see, the market creates the sequence once again. We have this pivot low in the market, which also creates what I call manipulation here. Perfect entry. And when we see the close of this candle above this high of this time, okay, the high of this candle, this close through, that shows me a change in character on a 30-minute time frame. Now, you could easily look for an entry off this 4-hour candle, but if you want to then go down to a 30-minute, you'll be able to see this change of character. Right, so the change of character would normally have happened earlier. Now, this I will go through on more examples, but this is an example to show you really that it hasn't worked in our favor, but you can still capture an entry here. So this, in fact, is the change of character on the close of this candle. And then we actually have price pulling back to this area of demand. We continue on our way. And again, price pulls back once again to this area of imbalance. And we continue up. So we've missed those two moves. Those entries there, we haven't caught them. We've basically missed them watching the 4-hour time frame. But this doesn't matter, because once we've seen this change of character, and then we're looking for our pullback for an entry. So if we're looking at the move up from this low to high, where's our 50% here? Price, you can see, comes below that 50%. See how that tool works. We're then going to mark out some lows in the market. Okay, we'll be below a low. We also have here an area of imbalance. We've filled it. Okay, we do have another low here as well, but price never comes to that low. And finally, what do we have here? We have an area of demand. So you can see where price came back to in this time, came back to those areas, into that area of demand. Now, what do we do again? We can do the same process. We can then look at the same thing we just went through on a 4-hour time frame on this time frame. So we can see we have a pivot low, but we don't break the high of this candle. To show you what I mean, we have a higher low to the left and a higher low to the right. Okay, and this is our pivot low. We don't break this high. We then make a new low here. Again, we don't break through this high. We then make another low there. So there's a new pivot low. And eventually we break through on this candlestick. So just remove all that. And then we mark this off. Oops, wrong thing. Let's grab this level. So this is our close through. And where is the candle we're marking off? This area. So that is now classed as our change of character. And then we go down to a 5-minute here. Let's just find that same area. Hopefully you're starting to see how simple this is to find a change of character. There's our last push down to make this low. We wick through. Now you can use this as a change of character with a wick, but if you want to be more consistent, look at using a close through. We have a close through here, continuation to the upside. That shows me the change of character. So what about capturing an entry here? Well, we look at the same thing. We have the move up. Now you can look for this move as price has already gone up if you wish. You can see price comes well below the 50%. You can use the full move where we do come to the 50% and spike through. So we can see the market pulls back. We can mark off this low. We have another low there, but the market's already gone through. And we also have sitting at this low, this area of imbalance, which gets filled. And then we see the continuation. So what could we do here? How could we find an entry? Well, you could use whatever type of entry you like. You could look for a reversal pattern, a pin engulfing, an engulfing candlestick like you can see here, and take the trade. So you could take a trade off that candlestick, or you could actually go down to the next time frame again. What could we do? We can see another pivot reversal at this area, another change of character. And we see the market breaking through. Now, to be honest, you could also use these 3 candles because we make a new higher low, new pivot low there, and there's our close through. So what we do now, we go down to, on the close of this candle, a 1 minute time frame. We've gone from a 4-hour time frame here all the way down to a 1 minute time frame, looking for an entry using this change of character. And again, we do the same thing. There's our low. So the real change of character here, I would use this high. And we've already gone through that area. So once again, we've seen the change of character. What do? We look for the move. Well, the move actually goes all the way from this low, this high. We're below the 50%. Perfect. Okay, so we even have this break of structure here. Retest it. What else do we look for? Again, we can start looking for previous lows. Here's a low in the market. And to be honest, we even have a final manipulation right here, this spike through. And if we look closely, we also have an area here of imbalance. Just missed this imbalance. And we also have, if you look here, an area of demand, where price does come into, and we get the reversal. And again, you could do the same thing on a lower time frame, but when we see this manipulation, reversal on this candle right there, perfect entry to take a trade. You could capture a long trade from the close of this candle here, stop the low, and you could just look to target the high of that move if you wish. That's still nearly a 4-to-1 risk to reward. Or you could actually go to a higher time frame, which would be in the 5 minute in this occasion, and you can look to target your high on a 5 minute, which would be this high here. You can see the market hits that high over 6-to-1 risk to reward. So that is how I actually use the charts to read those candles at those swing points to use that change of character. Now you can apply whatever strategy you like. I've just gone through quickly how you can apply the usage change of character with a simple swing trading strategy. Now first, let's go through what the break of structure is. Now the break of structure is simply going to be when we see the market making a trending situation, and the break of structure will be in the direction of that trend. So this is going to be our era of structure in the market, and when we see a break of that structure, that's the trend continuation. Now, when we're looking at a change of character, the change of character will be in two different ways. Either for the major trend, and we're looking for a change of character to break and basically just be a trend reversal. And then you'll be looking for the market to show you that it's changed its character with a continuation with another break of structure in the direction of the new trend. Now, many of you believe that it's the same thing, but it's not. It is a completely different technique. So let me go through in this chart and explain on the charts exactly how you'll be looking for a break of structure, and then where you'll be looking for that change of character. In fact, I'll go through to BTC and bits later in this video and go through how you can look to trade using this concept. So we're on just DXY. This is a chart I like to look at to make any of my trading decisions based on anything across that US dollar. Now, when we're looking at the market here, you can simply identify we've been in this long-term uptrend. And the break of structure starts at this level here in the market, where we see the break of structure here to the upside. We then have a pullback to retest that area. We have another break of structure. Again, we see another structure made. We have another breakout right here after a pullback. And again, the market breaks up once again. And that is simply what the break of structure is showing you. Every time we see the market pulling back on that trend, we see another break of structure. So if we continue to see a break of structure, then you continue to looking for those buys. Even here, we can see this wick on this candle is classed as a break of structure. Now, many traders will prefer to see a solid close of that break of structure, but you don't have to have it. Because if we're looking at a lower time frame here, you're most likely going to see a close through this level on a lower time frame. Now, the actual reversal in the trend is not going to occur on this one until we see the market breaking down, breaking this low in the market. That's why I've marked this out so you can see exactly where that trend reversal will be. So we're on the weekly time frame. If we are to see right here, price decides to turn down and it breaks the trend line, breaks this structure low, that would be classed as a change in character. It's the trend reversal. So that is how you can identify this with the trend using the break of structure, and then you're looking for that change in character. Now, remember the difference is we're looking for the market to go with that trend when we're looking for the break of structure each time. You're looking for the market to come back to an area of either imbalance, or we're looking for the market to come back to an area of demand on this occasion. Area here holding in the market. Why is it bounced? Well, we have a third test of the trend line. We do break structure here. Look, price has never come all the way back to this area of structure. So if you're a support and resistance trader right now, you'd be looking for the market to come all the way back here to retest that broken resistance for any buy trades. Now, by the time you've done this, you can see the trend line would have been broken. So why did we see a reaction here? Well, the simple reason we see a reaction is based off this area here, which is an area of imbalance. Why we see a bounce head to the upside, breaking that structure. So this, to me, is a valid break of structure, whether it's a close or it's a spike, but it must be, and this is important. Let me just grab an arrow. It must be, this candle must be a bullish candle. I don't want to see a bearish candle here. If we had a bearish candle here, then I would be expecting price to fall straight away. Now, at the moment, we've had the inside candle, this bearish candle. So we could see a nice push higher today, closing through, continue to break this structure with a nice solid close candle. If we don't see that and we see a bearish candle closing through, we have an area here of imbalance I've drawn. If that is closed through, then I'm most likely going to see the market breaking this structure where we see that change of character on this higher time frame. Remember, the change of character can be applied to the higher time frame, or we can use it as a confirmation entry or the change of character with a lower time frame. So to demonstrate that, let me just now go over to BTC. So now we're on BTC. Let's go through understanding the two differences once again with that break of structure and the change of character. So we look at the chart here to the left. We have a previous swing low. We have a break here to the upside. Forget all this price action here. We're just going to start from here. We have a pullback, and then we have another break of structure. And if we go actually closer into the chart here, we also have a small pullback, break of structure right here in the market. See, valid break of structure, and then there's your change of character to the downside. Now, there's a lot more going on here, but that is for another day. Now, once we see this breakdown, where's your next break of structure? That is going to be your next first break of structure. We pull back, make that basing, and then we drop through to break that low. This creates this area of supply where we can see the market pulls back in for a perfect trade. So once you can see this on the chart, it's going to help you to start finding these types of trades. Now, there's more here where we have some liquidity and we have the market pushing up into areas of imbalance, but that is more what I teach inside that Forex Masterclass course. Now, what happens is we continue to break structure. So we continue to break structure to the downside, and that would give you more areas of supply. So you can see the market continues to break more areas of supply. Again, we have another pullback, lower high, break of structure. Now, I haven't drawn an area of supply, but I have drawn an area of imbalance. And this is more I go through in that Forex Masterclass, how I use those imbalances, not only for actual entries, but targets as well. Now, that is more what I call an imbalance level. So we can see the market is now in this area here to downside. So we are bearish. We're really looking for sell trades, but a good area for sell here on this time frame when we pull back to this area of broken structure and this area of imbalance. Now, of course, a change of character here. Where would the change of character occur? This is a last swing high, pullback here, that's your change of character. If we then had a pullback, lower high, this is our first break of structure. So there are the two differences once again. So you can see the difference. Let's have a look at this area now on a lower time frame. Let's go to 4-hour time frame, and I'll quickly show you a trade you could have caught. Now, personally, I missed this trade, but it's a great opportunity to share with you how you can use that change of character. So we have this drop to downside here in the market. This creates an area of supply. We have now broken out this trend line. For me, I use areas of trend lines. I'm looking for potential areas to take trades. So we now have an area here of demand and imbalance. I'm looking to take a trade off if I see the reversal on the lower time frame. We also create an area of liquidity here. More on that perhaps in another video. And we create a small area of liquidity here in the market, and we take this previous high. Now, looking closely at the candlesticks is a great way to understand which way the market's going to go. What do we have once the market took out these highs? we have a nice bearish engulfing candlestick. So that's all about the manipulations in the market. It's not just a manipulation of these highs. There's another reason why the market reversed here, and that's not about the supply either. So for a change of character, we'll be looking for this low to be broken. So we break out here. At the same time, that's your first break of structure. So on this occasion, we're seeing on this time frame the break of structure and the change of character at the same time. That makes this area of supply. So this is your area of supply in the market. We're looking for a trade. It comes back, it tests that supply zone to the pip, and that would have been a great certificate strategy entry, and you could have taken the trade down to take out these previous lows. You could have a first target these lows, second target down here. Now we're expecting the market to take lows because it's an area of liquidity in the market where it needs to go to pick up more orders before it can pull back to the upside. So that is how you can look at using the break of structure compared to the change of character. Now right here on the lower time frame, we'll quickly just have a look at the 1 hour as well. You'll see on the 1 hour time frame we had the same situation, but this time we had this low here as your change of character. This creates this area of supply, and the market comes back in and retests it on this area for an entry. Or if you missed that, we have another manipulation for an entry here, which would be a great time to take a trade. So that is how you can look at applying the use of the break structure or the use of the change of character. And they are totally two different things. Again, let me just go back to a weekly time frame. We will do a sketch once again so you can see the differences. This is your trend direction, and every time the market does this, what's it doing? We're seeing that break of structure each and every time. Okay, now the change of character would have to break this previous low for the change of character to then look for entry to sell. Now, if this video has helped you today, it's given you some value to understand, and I mean some value to understand the break of structure and the change of character and what the differences are between the two and how you can use it in your trading. Don't forget to give me a thumbs up because it helps me to know you're enjoying this content. So the first thing we're going to talk about is how we actually look for an area of supply and demand. Now, if you're not sure, there is plenty in this channel that goes through the break of structure, but I'm going to briefly show you how we can use that in this strategy. So looking at the market here, we identify where we're seeing swing points in the market. We can see here we have a swing low, we have a swing high, and then we have another swing high here. Now, the market does not at any point break this high. So until the market can break above this high, we cannot create a new swing low. So this is a low in the market which took this previous high. Once you understand this simple procedure, this is what we call the break of structure of this previous swing high. Yes, we have all these micro swings inside this move up, but this is going to be on a lower time frame. On this time frame, we're looking at this break of structure. Before that, you've been looking at this break of structure here. And again, we shrink that chart down. You can see this is the previous swing low. This is the previous swing high. Now, that's all you need to understand. This is where we see the break of structure continuation. So once we've seen this break of structure, we need to identify our simple areas of supply and demand. Now, on this occasion, we're going to be looking for demand zones. Where we see price breaking this structure, we have a couple of demand zones we could use. There is the demand zone where we see the break through this previous high, this smaller area here. This creates our area of demand. So we could draw out a demand zone here. And you can see price comes into this demand zone. We have a bounce out and then a continuation lower. Now, sometimes these zones will work very well, but what we really need to be looking at is the origin of that move. So this is the origin of that move from here. And let's make sure we mark this out correctly. But this is the two areas of demand we had. The one that broke this previous area of break of structure, and this is our origin of the move. Now, personally, I prefer the origin because this is the better area to take a trade, but these ones will work as well once you understand the strategy you are going to use. So we're going to remove this one for now, and we're going to concentrate on this origin of the move. When price comes back here, there's another reason why price wants to come all the way back to this move. Now, I'm not going to go through it in too much detail today, but we're talking about an area of imbalance. we have a leftover area here of imbalance in the market. Now the imbalance is where we're going to find a leftover gap in the market, where we're going to see some orders left over to be filled when we see the market reverse. And that is all they're there for. But understanding how price will bounce from an imbalance to imbalance is important. And there are some great videos that go through that in this channel. I do suggest watching the previous video I released, which goes through the use of the imbalance and how I use it in my trading on a 1 minute time frame. It's a live chart we went through, we walked through price, and you'll see exactly how I do this on the 1 minute time frame. So we can identify here that the market's come in. So how do we look for our trade and how do we capture that trade? Quite simply, if I'm looking for a trade here, I'm looking for price to want to take this high. Again, there's a reason for this. We do have here again a leftover area of imbalance, and that's why I want to see price from here head back up to remove that high, to fill this imbalance was left over. So to find the entry here, we're going to use the area of demand withdrawn and the area of imbalance. I'm going to look for a change of character, and the simplest way to do this, when we see price pulling in, I'm going to drop down to a lower time frame. I have a few time frames I use, and I like to qualify my areas to take a trade. And on this occasion, I'm going to show you how you could go all the way down to a 1 minute time frame. But first, as we see price pulling into this demand zone, I want to qualify this demand zone. I want to make sure that the market isn't going to continue lower and just remove that demand zone. I have another losing trade. I'm sure many of you out there can relate to the fact you take a trade off an area of demand or supply and it just crashes straight through and you lose it. So using a change of character is going to help you to identify the market's going to reverse and you're going to capture a better trade. So once we see price coming down here, we're going to start identifying those swing lows and swing highs in the market. That's all we want to identify. The break of structure there, and we have a swing low, it's a lower high. Again, we break through, and the market then eventually does have another small swing high here and then another low here in the market. Once you identify this and it's zoom into price, you're going to start being able to see where the market is going. This is more what I call a drop-based drop, but it's still an area of supply. And once you understand your supply and demand zones, you're going to be able to start finding the change of character much easier. We also have an area of supply here, which is more of a swing high, because we do have a nice swing high. This is more of a sideways price action, and then the drop, why I call this a drop-based drop. So we're going to use both of these so you can see how it both works. Now, at this time, we're going to be waiting for the news to come out. This was last Friday, non-farm payroll. You can see we have this big spike down when the news comes out. This is going to bring in those sellers. What the market is doing here is just taking the low. After we fill this imbalance, we just take the low of that imbalance, wick into the demand zone, and we see the big push away. Now at this point, we're not going to be trading this news. We're going to wait for the news to settle, to show us where the market's going to go. As soon as we see this big bullish candle, this then indicates to me that we're going to go bullish. We're removing those areas of supply. And once it does this, we leave an area of demand. Just draw that out. So again, if you want to see how I draw my zones, there are plenty of videos in this channel. So as you see here, we have a break. This is our change of character. As soon as we see price breaking through this high, we see a change of character and we have a new area of demand left over. Now you could quite easily here just place a buy limit order, stop at the low of the zone, below this candle, and you'll be targeting the previous highs over here, this level here and this area of imbalance. So straight away, there's your trade, nearly a 5-to-1 risk to reward. Not a bad trade once you understand how to trade news impacts. So this is what's happening after the news has actually occurred. We're not trading the news, we're waiting for the news to settle, and then we're looking for our trade. Now this is a great trade you could have taken, understanding that concept. This is the change of character. We saw the higher time frame, then we have the lower time frame change of character. But if you want to go for a higher risk to reward, you want to see something more like a 14-to-1 risk to reward, then what you need to do is understand how you can drop down and do the change of character once again on a lower time frame. Let's go all the way down to 1 minute chart here. I'm going to show you how simple this is to use a change of character with a supply and demand zone. Let's just find where this area is. Now you can see when we have the news impact, look at this. Let me just remove this level. We can identify this big range candle. This is when news is released, and this is when the non-farm payroll comes out, and you can see the spike up, the spike down. They are basically taking all the stops out below this move here. We see traders buying up here. All of the stops have been taken. They wick through, close up, have another pullback and continuation. So if you was really watching the news, you could have had a trade here, understanding this was an area of demand. As we broke out of this high already here, we pull back, we wick through, and then we have a nice area to take a buy. So yes, you could have taken a buy from here. Again, we just have a quick look. I'll show you how you could have caught this entry. Entry, stop the low. There's your target. And that's just under a 9-to-1 risk towards us. So that's not a bad trade. And that's catching an entry right after news. But this can also bring you into a trade too early, and they can easily manipulate you out of that trade. So the best thing to do here is when price comes back. Let me just go back. We'll see when the price comes back into, let's shrink this out so you can see. When price breaks this structure high here on that 30-minute time frame, this is where we see the breakout and the market pulls back. Zoom in. We're not going to look at take a trade off here. What we're going to look at is where the market makes that swing low. So again, if we just mark out the break of structure, there's your high, there's your low, there's a pullback. So there's your high or low, and then this is your break of structure here. And this creates a new swing high. So when we see this, we can draw a new area of demand from here. Now, whether you use this candle or you use this candle, it doesn't really matter. But as long as you're using this area of demand. Now, personally, I would have probably used this move here, and I'm going to demonstrate to you why I would use this area. Now, I didn't personally take this trade. I actually took a trade on the Audi US dollar at the same time this was happening. I was watching the Audi and I caught a trade, a very similar trade we see here on the Audi. But this one would have been a great opportunity understanding how to read the news. Now, the reason the market comes all the way back here is because we're going to have, again, a leftover area of imbalance. Remember, we saw on the higher time frame, the market wants to come down to fill that imbalance. And as soon as we see the fill, we just pip into the demand zone and then we see the rally away. That's why I wouldn't have used this candlestick. I would have used this one because we need to see this imbalance filled. So taking an entry from here is quite simply enter the demand zone, stop the low. Now, when you're taking an entry, a limit order like this, you want to add a few pips on the spread to cover on the actual push down into this zone. If you mark it off directly at the open price of this bearish candle, you may not get filled. So always remember to add that spread. So that's a great tip if you're not sure. And again, this would be your entry, your stop loss, and your target is this area of imbalance. That's just under 14-to-1 risk to reward. You see how you can increase that risk to reward once you understand the change of character. We see the change of character here on the 30-minute. And then we also have the change of character as price comes in right here on a 1 minute. See, we create this low, push up, pull back, break of structure, leaving this area of demand here, where we see the breakthrough and this higher low, and that's where we capture that entry. So I do hope you've enjoyed this content today on how you can use that change of character out of an area of demand on this occasion and how to read the price on the chart around a news event. Now you have a better understanding of how to use and apply the change of character in your trading, then why not check out those 2 time frame approach with the use of supply and demand, and the link for that is coming up right now.